Hello everyone, welcome to the course of Abdullah FX, sponsored by Forex Engineer. Both are same. My name is Abdullah, and I've been trading Forex trading since 6 years, and there are a lot of strategies I learned by myself, by others, but ending up trading three strategies that I have personally developed and modified for you guys so that you can have a minimum time on your screen and you can make a decent money trading these three strategies, particularly these three pairs: pound yen, gold, and NASD 100. Uh, these three strategies all are three different strategies for all three different pairs. I will be explaining each strategy in detail, how you how you will trade that strategy, the entry criteria, the exit criteria of that strategy, and what time you are should be in the front of screen while trading, while taking the trade, what scenarios you should be aiming for while taking a trade, whether you can take that trade or not, whether it is a high probability trade or not. All these things will be cleared in this course. That will be helpful for you and definitely change your trading journey dramatically. If you just copy paste and follow the rules I will explain and teach you guys in this course, you will be definitely see the results that you will be a successful trader after trading just three of these strategies. Even if you can learn three strategies of all three different pairs, it depends upon you. If you want to stick to one pair and one strategy, it all depends upon you. But in this course, you will get all three strategies, you will trade all three strategies, and you will analyze by yourself that what strategy suits me best. For me, I trade all three strategies. I have three different accounts. I have three different sessions that I trade these three pairs, particularly in three different sessions, three different accounts. And yes, I have made around 25% this month and made around 40 to $50,000 trading just these strategies and passed almost three to four problem challenges manually. So let's get into the charts and start our first strategy, which is a pound yen strategy, which we called also GPP JPY. So the pound yen strategy will be the strategy that we will gonna be the trade only one 4 hour candle. Our trade for the pound yen will be only 1 hour, one 4 hour candle move. What time on what time you do you guys trade this strategy will be only two times. You will sit in front of your chart. The first candle, 4 hour candle, you will be trading like will be like 5 a.m. EST candle when the 4 hour candle closed. You should be at the front of chart on exactly at 5 a.m. or 5 minutes before 5 a.m. so that you can see that either the opportunity is there or not. If the opportunity is there, take that trade, put your stop loss, put your take profit, run away. That will be your set and forget strategy. You will not be there to manage it. You will set your stop loss, you will set your take profit, and boom, go to the gym, go to the walk, spend time with your partner. Do not worry about the result. This will be so helpful for you to be as a consistent, profitable, and disciplined trader. That will be helpful for you by trading just one session. one pair, and it will also help you to avoid over trading. So on the pound yen, when you wake up at 5 a.m. EST, or depends upon on your time, it's night or day, the first candle or 4 hour candle you will be trading, it will be 5 a.m., and the second candle will be 9 a.m. EST. That will be New York open, that's the London session trade, that will be a New York session trade. I usually trade London session for pound yen 5 a.m. EST. So we always be looking for to trade only one 4 hour candle. We will first analyze how the previous 4 hour candle closed, which is right here. When you wake up, you see that the previous 4 hour candle closed bullish. I am predicting that there's a very high chance that next candle close will surely be a bullish candle. So we are looking for buys only if previous 4 hour candle, which is here, closed bullish. The number one step is to follow you when you wake up. The first thing you have to see what color of the previous 4 hour candle closed. If it's bullish, if it's green color candle, you will only be looking for buys. If it's bearish, you will only be looking for sells. So when you wake up and you see that the previous 4 hour candle closed bullish, you are predicting that next candle is to be a bullish, and another, when the next candle close bullish, you are predicting that next candle is to be bullish. This will be your first step. When you see that previous 4 hour candle close bullish, you will scale down to your 5 minute time frame in order to take the entry. That will be your second point in order to consider to take the entry. First, you have to keep the mind the time. When is the 4 hour candle closed? That would be your first 5 a.m. candle, 4 hour candle to close. That is here. This is the 4 hour candle close. What we are predicting that next candle is to be closed bullish. Now what criteria is to enter the trade? That would be like lowering the time frame, and on a 5 minute time frame we will be seeing the structure, or I will be explaining you guys that how you enter on the 5 minute time frame. So as we have seen that in the previous example that I gave you, that when we are considering previous 4 hour candle to be closed bullish, the next candle is to be bullish. What is the next color of the next candle? It's bullish. When this previous candle closed bullish, what's the next candle? Bullish. When the previous 4 hour candle closed bullish, what's the color of the next candle? Bullish. We will take buys until previous candle closed bearish. What happened here? Previous candle closed bearish. Now we will change our buys from bullish to bearish. When the previous 4 hour candle closed bearish, what's the color of the next candle? Bearish. What's the color of the next candle? Bearish. What's the color of the next candle? Bearish. What's the move of the next candle? Bearish. It's all money, money, money here, money here, money here. It's all money. Simple. We have to consider it as a belief that next candle is closed either will be a bullish or bearish. If the previous candle closed bullish, we have the belief that next candle should be bullish. Let's consider a example. Here at 5 a.m., 9 a.m. EST, for example, at 9 a.m. EST, market closed 4 hour candle as a bullish structure. Here I will mark its high. Now, when this candle close bullish, I will mark its high and scale down to 5 minute time frame. Now, as we have seen that here, this is the high of the 5 minute time. This is the high of the 4 hour candle close. This is the high. This is the high of the 4 hour candle close. Now, what we are looking for is the wick to the downside that creates a structure on the 5 minute time frame. That's a high of a 4 hour candle, and that is a wick that is created a 4 hour bottom wick. This is the 4 hour bottom wick that is created structure on 5 minute time frame. Then on the break of the structure we will take buys. The first step is to consider as to see that whether a previous candle closed bullish 4 hour or bearish. If it's closed bullish, you will only look for buys. The second step criteria, you will see when you scale down to 5 minute time frame, you will see that the structure on 5 minute, the criteria of the entry. What is the criteria of the entry? The break of the 5 minute high. And just what will be your stop loss? You will first wait for the 4 hour candle to close to create a bottom wick. You will wait for the 4 hour candle to first. This is the 4 hour candle close high. Now what we are making, this is a 4 hour close high. Okay. Now what we are wait for the next 4 hour candle to do, create a bottom wick, then flip bullish. When it flip bullish, you will take buys on the 5 minute high, and your stop loss would be below the wick, and your target would be 1 to 2. This is as simple as that. The first step is to follow whether the previous 4 hour candle closed bullish or bearish. If it's closed bearish, you will only look for sells. If it's closed bullish, you will only look for buys. The entry criteria is that when the next candle that's the next new 4 hour candle that start will create a bottom wick and then started breaking its own 5 minute highs, then you will take buys or the break of the structure, and your stop loss will be below the wick or below the 5 minute low. That the 5 minute that 4 hour candle created a wick that would be structure of your 5 minute low. Then when it breaks, you will take buy here, and your stop loss will be always below the wick in term of when you are taking buys, and your target would be around 1 to 2. You can hold that up to 1 to 3, depends upon you, but I will suggest you to stick 1 to 2. Now a selling example. For example, I took a trade on 5 a.m. EST, and I won that trade. Now I came the next day, I traded a 6 a.m. candle. The next example I am gonna show you is the will be the bearish example. This will be your 9 a.m. candle closed. That will be your 9 a.m. bearish candle closed. What is the color of this candle? That is a red color. Bearish candle. What you are looking for when the 4 hour candle close bearish? You are only looking for sells. You are only looking for sells. This is the what I told you. This is the high. This is the bottom wick. Then boom. This is the bearish candle close. What we are look for? The same scenario. We will look for the wick to be created which is this is the candle close, the new candle. We are looking for the wick to create, then flip bearish. When it's flip bearish, I will take sells, and my stop loss would be previous wick here. We'll also explain on the 5 minute time frame. This will be over 4 hour candle close. That will be over low. That will be over flip. When it's created a top wick, then flip bearish. At that point, you will be taking the trade. If I scale down to 5 minute time frame, if I scale down to 5 minute time frame, this is the low. This is the wick created. What I told you, take the sells on the break of the low. When you take sells on the break of the low, and your stop loss would be above the low, above the previous high, you will target your 1 to 2. And you will not put your stop loss to break even. In this strategy, you will not put your stop loss to break even. Set your stop loss, set your take profit, and go to your gym, go do your other activities, go to your job. That will be your only 30 minutes. That will be your only 30-minute time on the charts. You will see either the next candle is to be bearish or bullish. You will take trade, set stop loss, set take profit, and go. You will only take the trade. You will only focusing on 4 hour and 5 minute time frame. When the 4 hour created a topic in term of when you are looking for sales, when you are looking for sales and previous candle closed bearish, what what will be you invite? You will be seeing that a market created a top wick, now breaking the low. When it started breaking the low, you will scale down to 5 minute time frame, and you will wait for this 5 minute low to be broke. When this 5 minute low to be broke, you will take sell, and your stop loss will be above this level. That would be around 20 to 25 pips stop loss, sometimes 15 pips stop loss, depends upon the market. And you will target 1 to 2. And you will not set your stop loss to break even. Let the stop loss hit or let the take profit hit. That would be a super effective strategy that helped me pass through for a front challenge and made around. This strategy is also responsible for me to made around thousands of dollars. If we see on the left hand side, we can also see that when the 4 hour candle close bearish, the next candle, what is the next candle? The bullish. What's the next candle? The bullish. Yes, you can lose the trade. Yes, you can lose the trade. But when you stick to one trade a day or two trades a day, maximum two trades a day, you will be profitable at the end of the month. If we see that the bearish candle 4 hour close, what's of the next color candle? Bearish. That's a money candle. Money. Money. You will only you will just not only trade when pound yen is consolidating, it's in a range. Otherwise, you will be trading pound yen. You can easily trade pound yen. If we see here, previous previous week on a 4 hour time frame, market was ranging. You should not be trading pound yen. Simple. The moment market breaks its level on 4 hour time frame, what will be the color of the next candle? Bearish, and that would be your $5,000 profits if you risk $2,000 on a 200K account. $4,000 profits. What market did? What candle did? It created a top wick, then flip bearish. You will take that trade. and your stop loss would be above the wick, and your take profit depends upon you. I told you to stick to 1 to 2, but it depends upon you. If you want to hold it, it's up to you. It will be 7 hour. So that's a GJ strategy. Simple. Just you have to have mind. You have to have in your mind about two times that you are trading pound yen. That would be 5 a.m. EST or 9 a.m. EST. Two things to keep in mind. For what is the previous candle closed? Is it bullish or bearish? Is it bullish, then go for buys. If it's bearish, go for sells. The next step to follow: the moment previous candle closed bullish, scale down to 5 minute time frame. See the structure. When it's 5 minute time frame breaks its high, take the trade. Put your stop loss below the wick and done for the day. That would be your 30-minute session. When you come to the screen, you see that, yeah, next candle. When you come to the screen, you see that, yeah, previous candle closed bullish. Previous candle closed bullish. Now it's a good, very probable, very high probability trade. I will take that trade when it's created a bottom wick here. As you can see that it created a bottom wick here, and when it's flip bullish right here, I will take the trade on the 5 minute time frame, breaking the highs, and my stop loss would be below these levels, below the wick, not the levels, because we are intraday traders, and target would be around 1 to 2 or 1 to 3, it depends upon you. So that would be your GJ trade. So moving on to our next strategy, that would be on gold. You can trade gold at any time, especially when you see the structure forming, or you see the break and retest forming, or you can see the 4 hour resistance or 4 hour key level is reaching. But the most important thing to keep in your mind while trading gold, you have to trade with the trend. Otherwise, you will be gone. The first point of this strategy is always trade with the trend. And how you will analyze the trend? You will always analyze the trend on the 1 hour time frame. Example I will be giving you right now. You will scroll down your chart, zoom out your chart, and see whether the market is trending to the upside or to the downside. Let's first discuss the basics. Basics of this strategy. When you come to the chart and you see the market is making higher highs, higher lows, breaking previous highs and making a new higher low, then making a new higher high, then a new higher low, then a new higher high, the new higher low, you always be looking for buys. You are always be looking for buys when you see the market of the gold on the 1 hour time frame is trending to the upside. When you see that market is breaking its previous high, for example, right now I'm just giving you a basics example, then I'm going to jump into the chart so that will be easy for you to analyze and understand strategy. That will be your uptrend strategy. Uptrend example will explain you the downtrend as well. The only time you will be taking buys when market breaks previous level of resistance and retest at that level. You will be putting a buy limit, or an instant execution, depends upon you. Because market will be surely reacting from its previous level of resistance that it breaks. And gold respects its level so beautifully. I trade gold for almost 6 years, and it's a bread and butter for me. You will be looking for only buys when market is in an uptrend. You know the higher high, higher lows. This will be your higher high. This will be your higher low. This will be your next higher high. That will be the higher than its previous high. And you will be wait for the previous. You will wait for the retest and higher low to form to enter the trade. You will take buys until market changes its trend. You will continuously take buys until market changes its trend. You will continuously take buys until market changes trend. That would be your new higher high. Then you will wait for the retest again, then for the buys. The only time you look for sells when market break its own previous lower higher low, which will be down here, and started making its new downtrend. That example I will be giving you right now on the market as well here. Just focus on this first. The entry criteria would be on 4 hour time frame, that would be like buy limit or sell limit, or instant execution if you are in the front of the charts. If you see that the market breaks its level, for example, if you see this that would be your higher low and next trade. That, for example, if it hits your stop loss, if it hits your stop loss here, now the trend is changed because it's break its previous higher low. Then you will what you will be waiting for to retest that level, and then expecting the market to make a new lower low. When market makes a new lower low, when market is here, you are you know that that is your previous level of retest, that area of interest. You can call it support. You can call it resistance, area of interest, break and retest, key level, whatever you want. It's up to you. Whatever you call this area. If you want to call this resistance, it's up to you. If you want to call this area of interest, it's up to you. If you want to call this key level, it's up to you. When market is here, I am expecting the market to come back to this level and retest. I will set a sell limit and my stop loss would be above the level, and my target would be the previous structure on the left hand side. If it's 1 to 3 or 1 to 2, it's up to you. When markets come back to this level, triggered me in, I will be 0% emotional. I know that that strategy will work. I know that it will be working in the long run. I know that market changes its trend to higher highs, higher lows, higher highs, higher lows to now lower highs, lower low, lower highs, lower lows. Now I can enter the trade and expect the market to make a new lower high, then a lower low, then a new lower low, then lower high, then a lower low, then a lower high, then a lower low. It's up to you. If you want to add the positions, you can add the positions. Or if you want to manage the position, it's up to you. You can trail your stop losses on the previous lows, on the previous lower highs. That would be your gold strategy. Now I will explain this strategy on the live market. If we see here, the market is in a downtrend, super bearish. What market is doing here? Market is making lower highs, lower lows, breaking its previous lower highs, previous lows, and making a new lower high, then a new lower low, then a previous retest, then a lower low. You see that here? You see that here like this. Exactly the same thing I am explaining. If you see that the market is in a downtrend, you will only take sells.